Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of February 10th through 14th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you a full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your own trading goals. With that, let's get into the market. So, as you guys probably know by now, we've been seeing what everyone likes to call a kangaroo market that is completely controlled by headline news and whatever the current president is saying. All right, and so we've actually had a pretty interesting pattern playing out here in the overall market. So the S&P 500 or ticker symbol SPY, and where the Fridays of every single trading week has either resulted in a gap down on the following Monday, or Friday itself has become a very, very weak and very bearish trading day and performance. So, for example, about 2.5 weeks ago, we saw this candlestick here on Friday ending with a very nice bearish close that resulted in a very large gap down on the following Monday. And then we had a very similar pattern playing out in the next week as well. And last Friday, we also had yet another bearish candlestick that was also accompanied by a very large selling volume. Now, here's the thing. I don't know if we're going to be seeing another gap down, a large gap down overnight, because again, the markets are literally being controlled and is very hypersensitized to the overall headline news and what President Trump is saying. So who knows what can happen overnight right now. But based on this current pattern here, right? Based on the actual data that we have right now, the current data, I am seeing a potential for us to have an actual breakout to the upside. And the reason being is that, first of all, we're making this very nice rounded bottom here. Okay, well, we've made this rounded bottom, and this current kangaroo market that we're seeing right now for the past around 2.5 weeks or so, we've actually created this very nice rounded handle, all right? At obviously a very smaller one compared to this big macro rounded bottom. So this gives us a textbook cup and handle chart pattern. It's a very bullish chart pattern at that as well. So, if this current handle formation with this constant whipsaw of a very, very big move down, and then obviously an immediate snapback rally to the upside, if this continues, right, I would expect this third week of this constant up and down action to finally give in to a potential breakout to the upside, because the fact that maybe this pattern is becoming a bit too obvious, and it'll be a lot more logical here for the markets to try to actually move up higher without having another gap down on Monday, right? So to me, this seems like it's becoming a bit too obvious now. Maybe the markets, hopefully might move away from being so sensitized to the overall headlines and what President Trump is saying, and potentially and hopefully this current price action that we've been seeing, of this current whipsaw action, has fully priced in what has been going on in the overall economy and the current trade war as well. So that's kind of what I'm looking out for this week. As long as we're able to hold over the psychological $600 level as seen here on this yellow line, we should be able to see a revisit of last week's highs, or at least within the vicinity of the current all-time high resistance level sitting at $608.50. So to finish my statement here on the overall markets, from a technical perspective, we need to consistently watch out for the prices on the overall markets to constantly range between major areas of demand and major areas of resistance, right? Or supply. And so currently right now, the only range that we should be focusing on is the 600 level as an area of demand or support, and this 608.50 level as an area of resistance or supply. All right. So as long as we can actually see the price tightening up, since we are seeing very wide price ranges right underneath this 608.50 resistance level, then we can have that ideal breakout to the upside into new all-time highs, giving us the official confirmation that yes, this is indeed a cup and handle chart pattern formation. All right. So with that being said, okay, I want to also just quickly go over the reasons why we had a very, very bearish move down last Friday. So if I remember correctly, just on the top of my head, the markets reacted very, very harshly to the downside once the consumer sentiment report came out. And I believe the data was, the actual data was 67.8 compared to the estimated data of 71.1. So it's a very ugly number that came out compared to the estimated value. And the markets obviously did not like that. And especially XLY saw some significant selling. Right, so this is the consumer discretionary sector, right? So it's loading here, so let's give it some time. And as seen on this candlestick on Friday, the price has officially closed below its rising daily 50 SMA, or this dark blue line. Now, this is a very, very bearish looking candlestick, which is also accompanied by some very good solid selling volume. It was exactly at the average selling volume as well. So last Friday was 2.77 million, and the average daily volume right now is at 2.77 million. So I wouldn't be surprised if the selling volume continues to increase from this point forward, as long as the price continues to move down. Now, last week also on XLY, we saw the price hitting and rejecting from the daily 10 SMA, which is also curling down, and you do not want to see the daily 10 SMA, a very short-term SMA, curling down if you want to see an uptrend. And so for the fact that we've broken below and closed below officially the daily 10 and the daily 21 SMAs and the daily 50 SMA, just truly tells us that, you know, this consumer sentiment reading was not good, and this specific sector, consumer discretionary, so non-essentials, is going to take a big hit. And I took a look at individual names and brands, you know, like Nike, Deck, right, Deck Outdoors, and other very major leaders in the kind of the consumer discretionary and non-durable groups. And across every single names that I looked through over the weekend, they're all very, very weak. So to me, this tells me that, hey, you know, there could be a potential, this could be a potential warning sign for the near-term future, maybe a year down the line, if we do see these constant push lower from these consumer names and overall consumer sectors that truly matter, right? And especially with the individual leaders that are in these individual consumer sectors, right? So to me, this is our first warning sign that we need to take heed of in the future. And you know, as long as we can see a sustained breakdown to the downside with lower highs, which we've seen so far, and possibly maybe even tomorrow lower lows for XLY here, we should be seeing a sustained new downtrend, as we've obviously, you know, we saw a lot of consumer names having phenomenal runs from the lows of 2024, even 2023, and we should be seeing a potential correction in these groups and sectors. All right. So for XLY, as long as I can see this continued selling going on, we should be at least retesting the rising daily 200 SMA, which is, mind you, from the current price to the closed price of the daily 200 SMA, we're about 13.50% away. All right, that's a huge move, right? So, I don't know if we're gonna get there since the rising daily 200 SMA is still rising, hence the reason why I said rising. And so, depending on how quickly the price moves lower or how slowly it moves down, it will depend on that, right? As the daily 200 SMA continues to rise up higher and as the price continues to break down. All right, so with that in mind, okay, let's take a look at our first and final swing trade idea for this trading week, IOT. So IOT has had a phenomenal run since its earnings gap down. And IOT, if you guys remember, was a swing trade idea all the way back in September. I believe it was September or November. Let's see. No, it was November. It was November of 2023. And in fact, we were looking at IOT even before that as well, in the early IPO times as well, all the way down here. Now, all of these lines so far from the past has actually proved to be very useful, because this name has actually used all of my levels that I've drawn here from a technical analysis perspective and used them as levels of support or resistance depending on where the price was at. And so with the most recent earnings report, there was a nice gap down and a continued move lower, but the price began to range perfectly at a previous level that I've drawn here at 42.20-ish and all the way up to $48, right? So the price continues to be very focused on using these levels here of resistance and support. And so technical analysis has proven to be very useful on this specific name. Now, I'm going to use that same technical analysis skills and apply to what we should be seeing or potentially seeing in the next couple of weeks or a couple of months for this swing trade idea. So as seen here, all right, so this is already drawn here for us, but I've drawn this for the report itself, and I've given you guys a lot more fundamental and technical analysis on this name. So make sure to read the report before you watch this video. And again, if you guys are watching this video before you read the report, pause this video right now and go back and read the report first. Okay, so for IOT here, we made this very nice rounding bottom here, and it's the same as what we saw on SPY, right? And except for the fact that IOT has yet to make or form a potential handle. And that's the reason why I've given us two different probabilities of a handle formation, because, well, we usually have two subtypes of cup and handle chart patterns, if you guys didn't know that. And so we usually have a textbook cup and handle where we have a very nice rounded handle, but there is usually another subversion of this cup and handle where it's also a textbook cup and handle chart pattern too, but the specific handle actually becomes a descending handle, where in itself, right, if you're not using it as a cup and handle chart pattern, it would just be a simple descending channel, right? But we want to make sure we incorporate this very large, very nice looking rounded bottom to create that overall macro cup and handle chart pattern. And so we need to watch out for the price to potentially create these two handles, right, for the next couple of weeks or even the next couple of months, or at least leading into the next earnings report, which is around, well, scheduled around March 6th of next month on after hours as well, right? So with that being said, okay, the reason why I actually want to see some very good solid pullback, a very, very tame pullback, not a very quick or a pullback that is filled with selling, is that I want to obviously see the handle being formed, but I want to see some solid consolidation coming in after the price broke over this $48 resistance level and it continued to just rocket up higher, completely ignoring what the markets were doing. And again, I'll remind you guys that this is a software name where the entire software group has kind of been ignoring what's been going on on the news and all these tariffs and trade wars, right? Because again, it's a software company. It's not dealing with hardware where it will be more affected by tariffs and other economic indications, right? Or news. So with IoT here, the strength has been absolutely incredible. The bullish momentum has been absolutely incredible as well after completely filling in this earnings gap down as well back around, I would say around 2 weeks ago, 2.5 to 2 weeks ago. And so with this potential Friday candlestick now, we had a nice rejection around $55, right? So the high of the day last Friday was 55.30, which is also the high of last week. And this got me thinking that, hey, maybe we're starting to see a potential descending resistance trend line forming here. And so that means there is also a possibility for this cup and handle chart pattern to actually form in favor for a descending handle, right? But again, I give you guys two possibilities here, or probabilities, because of the fact that, well, we don't really know what could happen in the future, right? I wouldn't know that either, right? So, with 8+ years of experience, you still can't predict the future, no matter how hard you try, right? So as long as you know what you're doing, you can at least understand the probabilities like I've drawn for you guys here. So with this descending resistance trend line, there's a higher probability or chance for the price to make a potential descending handle, or again, a micro descending channel, to give us that overall macro cup and handle chart pattern. All right, so as long as we can at least hold around a range of at least 50 to 53, or at least above 53, which will be very ideal, we should be forming this descending handle. Now, if anyone wants an earlier but riskier entry point, we're looking at a potential long bounce entry either at 52.10 or 53.10, and obviously depending on how the price moves, we can either add to that position to the potential future open position, or we'll get stopped out. And again, the entire 3-point game plan, along with the entry points like I've shown you here, the stop losses, and the specific price targets are all on the report. So again, make sure to read the report. All right, so again, I just want simple consolidation, no large sell-offs to the downside. All I want to see is some very tight consolidation that creates a potential handle, whether it be a descending handle or a rounded handle. And once that consolidation continues to form, we'll be seeing the daily 10, my red line here, and my daily 21 SMA, the light blue line here, catching up to the price and mingling with the price, and eventually potentially giving us that very nice breakout to the upside into the previous pivot high points, and potentially, ideally, into new all-time highs. All right, so that is it for this video. If this technical analysis video was very, very insightful, but most importantly, applicable, make sure you hit that like button down below. And if you're new here and you aren't subscribed to the channel yet, make sure you hit that subscribe button as well. Also, if you're watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many, many readers of the CFO Swinger Watch Report, which will automatically give you complete access to the private CFO Discord community, where you can expedite and further your learning in trading. All right, I am offering a 50% off for your first 30 days, and it's a first come, first serve basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot using that 50% off discount code. Again, all you need to do is DM me on Instagram at ChartsFocus1. Good luck, and I'll see you all tomorrow morning.